Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 6th, 2026, and we're diving into Genesco's recently released earnings report for the fourth quarter and full fiscal year 2026. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Genesco has shown some interesting developments this quarter, and I'm excited to break it down for our viewers.
Revenue and profitability overview. Let's start with the top line. Genesco reported net sales of $800 million for the fourth quarter, a 7% increase compared to last year. John, can you elaborate on the factors driving this growth?
Absolutely. The growth was primarily driven by a 9% increase in comparable sales, with both store and e-commerce sales contributing positively. Operating income also saw an 11% increase, reaching $51.3 million, which is a testament to their effective cost management and strategic initiatives.
And how did this translate into earnings per share?
Genesco reported an adjusted EPS of $3.74 for the quarter, up from $3.26 last year, slightly beating the analyst forecast of $3.73. This indicates strong profitability improvements despite a competitive retail environment.
Segment performance and strategic initiatives. Genesco's segment performance was quite varied. Journeys led the way with a 12% increase in comparable sales. What are the key strategies behind this success?
Journeys has been focusing on product elevation and enhancing customer experience, which resonates well with their target demographic of teens. This has helped them gain market share and position themselves as a style leader in footwear.
How did the other segments fare?
Schuh and Johnston & Murphy also showed positive growth, with Schuh navigating a challenging promotional environment in the UK. E-commerce continues to be a strong channel, now representing 31% of retail sales, up from 30% last year.
Operational efficiencies and future outlook. Operational efficiencies seem to be a highlight this quarter. Can you tell us more about how Genesco managed their expenses?
Genesco successfully leveraged their selling and administrative expenses by 140 basis points, primarily through decreased occupancy costs and selling salaries. This, combined with a disciplined approach to cost management, has improved their overall profitability.
Looking ahead, what is Genesco's outlook for fiscal 2027?
Genesco is optimistic about continued comparable sales growth, particularly at Journeys and Johnston & Murphy. They expect to see improved profitability and shareholder value through strategic growth plans and cost management.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $3.73 for the quarter. How did Genesco's actual performance compare?
Genesco slightly exceeded expectations with an adjusted EPS of $3.74, beating the forecast by 1. This minor beat reflects the company's strong execution and ability to navigate market challenges effectively.
What does this mean for investor sentiment?
The slight beat on EPS, coupled with strong sales growth, should bolster investor confidence. The market generally reacts positively to companies that consistently meet or exceed expectations.
Key takeaways. In summary, Genesco has delivered a strong performance in the fourth quarter of fiscal 2026, with notable growth in sales and profitability. Their strategic initiatives and operational efficiencies have positioned them well for the future. John, any final thoughts?
Genesco's ability to drive comparable sales growth and manage costs effectively is commendable. Their focus on strategic growth and customer experience should continue to yield positive results in the coming year.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Genesco's performance in the comments below.